All right. Hello, everyone. Welcome to our very informative, I hope, webcast. As informative as it can be, realizing it's a sneak peek. But I tell you, it's a great time of year when we start thinking about 2024 in this case, and kicking off the year in Tampa with our flagship event. It really is the best event VectorVest has that's available for people to attend to learn how to use the product and really make the most out of the next year. And so I'm delighted that so many of you, great attendance, have taken time out of your busy schedule to be here with me. This one's going to be pretty quick. We're not going to do very much instruction, just give you a high-level overview of the course. And just quickly want to say, I'm just a small part of a very highly educated, wonderful team here at VectorVest. We all take pride in delivering the best stock market guidance you can get anywhere at any price. My name is Steve Chappell. I'm the Director of Trading Systems Development. I will be in attendance and delivering presentations at this 2024 event. And alongside me, I've got some very astute presenters that'll be there as well. And one that didn't even make the picture, but is also going to be making an appearance. We'll talk about that here in just a sec. But just starting over at the left with the gentleman across the bottom of your picture there, that is the smallest of us. That's Jerry D'Ambrosio. He's our technical trading aficionado. He's going to be there delivering a couple of presentations you'll learn a little bit about here in a sec. Right next to him in the front row is Ray Clark. He's our fearless leader at VectorVest on the education team at this point, and will be also delivering some presentations. In the back row in the middle is Jim Penna. He heads up retirement services. Retirement services is certainly a headline item at this 2-day workshop, this 2-day event. And boy, he does a bang up job, and really focusing on not just the great stocks that one should pick, but how to really manage and make that thing secure and make it truly what we call worry-free. In the front row and there in the middle, that's I'm sure many folks know that face and that profile. That's Glenn Tompkins. He's the most animated of all of us, and just a joy to listen to present, and he'll be there as well. And in the back row there behind me is Ron Wheeler, our options guy, our options expert. And he's going to do a couple of presentations there, even do some live trading of options while we're there, which I think, again, is, well, there's a lot of highlights, I suppose, right? So look, the main thing here is there's going to be a lot of information. There's going to be information here for everyone, whether you're a swing trader or a retirement-minded investor or somebody who likes to dabble or just full-time options. You're going to get the education you need at this event. And so that's broad strokes, 30,000-foot view on just imagery here. We'll dig into things a little bit deeper and just kind of get the discussion flowing and then hit the highlight topics again with a little bit more clarity on everything that's in the course. So the big mistake that confronts a lot of investors today is just the ability to be inundated with data. I mean, this day and age, when you can turn on CNBC, you open up your Gmail account, you get 50 emails there from all kinds of different newsletters telling you stocks you should think about buying. You can put you into gridlock. And even worse, they may not be necessarily the best ideas for things that you should actually buy. So in our view, the fix to all of this is to have a plan, a simple plan, a proven plan, something that we have seen work, and follow it. It really shouldn't be all that complex. It doesn't need to be complex to be good. It can be simple. That is a real key word there. And so that plan really needs to stand on three legs, like a three-legged stool. If you remove one leg out of a three-legged stool, what happens to the stool, right? It falls over. So I steal that a little bit from, who wrote that book? Dr. Alexander Elder in Trading for a Living. He uses the three-stool analogy. Well, here at VectorVest, we certainly believe in that three-legged stool analogy, in that one of those legs is comprised of market analysis. It's the most important. It's the sturdiest of the three legs. And so we need to really learn about how VectorVest analyzes the stock market and can position you in the right spot at the right time. For example, we recently had a up call with our green light buyer RT kicker combo timer, which I could take a little bit of brief time here just to show how good it really is. I'm going to get over into VectorVest. And so if you turn on CNBC, you're going to be getting all kinds of stories and counter stories about, is it the right time to buy stocks or not? Are we in a recession or not? Is the Fed going to be raising interest rates or not? How many times are they going to pivot and lower interest rates next year and all this crazy stuff, right? Or you can just stick with the facts. Just give me the facts, ma'am. Is the market going up or down? Is it likely to continue or not? Is really what I want to know. And hopefully you feel the same way. So we try to eliminate all that emotion and all that rhetoric and just stick to, tried and true VectorVest analysis. And so if we come into our market timing graph and we go to the GLBRT kicker, I really feel like this is the one that kind of cuts right with most folks, right? It's not too fast, not too slow. It's kind of just right. And it eliminates a lot of potential whipsawing on the market. So long story short, when you get your first green triangle after a confirmed down, that's often going to represent your best opportunity to be buying stocks again. And so anytime that you've got these green triangles in tow, it's okay to either start a campaign or, preferably on the early ones, the earlier the better, and then even replace stocks though. As rallies continue to mature till you get a confirmed down, then you just put the brakes on. You either use defensive option plays to mitigate against loss, or you go to cash, or you do things that eliminate downside risk, because you never know when some of the bigger drops are going to come. They often come when you least expect in many cases, has been my experience, right? But then you need to know the right time to start buying stocks again and not buy into some of these that never got going enough to potentially have further legs to keep going, right? And so this system is the best I've seen over my 20 years here at eliminating as much of this noise as possible and keeping you focused on the big picture. And it's true, who knows? This might end up reversing course, right? But if we go back, if history is any guide, there is often, even in some of the worst of stock markets like 2022, February 21 through late 2022, there were opportunities in there to buy some stocks and make a little bit of money and then get the heck out of Dodge, let the market come down some more and buy again and just rinse and repeat. So it is really, really good. Now, if that's not super clear, remember, we got a lot of time at this 2-day event to make these things a lot more clear. I just wanted to get your feet wet with it and also give you a little bit of guidance. I try to do some teaching while I'm here if I can. That is a great timing model to follow. In my opinion, it's the best one we got. Okay. I'm going to get out of here and back over into the slides, and we'll keep going. All right, so the next thing that we need to account for, the next leg of that three-legged stool that we need to be able to stand or sit upright on, is being able to find the right stocks for you. So the interesting thing, of course, here is some investors are far more aggressive than others, and some are, of course, far more conservative than the aggressive ones. And that's really one of the strengths of VectorVest, is it has the ability to cater the system to you. Once you have a pretty, a solid underlying timing model, what makes you aggressive or conservative is really the kinds of stocks that you're picking, not even so much the market timing signal is the case that I would make. What you need is a good reliable market signal, okay? Then what really is going to need to be figured out for you is who are you and what are you trying to accomplish, and then what are the right stocks to get that job done. So at this event, we're going to spend a good deal of time talking about what stocks are right for you, and then give you examples and experience on what are some of the best opportunities then for you as an individual. So if you're prudent, here's a few techniques that we've seen work over the last 25 years, for example. If you're aggressive, you're going to get some different ideas. But Dr. DeLito himself says good portfolio management starts with buying the right stocks. Hopefully a lot of you have read the little green book, Stock Strategies and Common Sense. In that book, I'm going to pull, again, from the 30,000-foot view instead of getting into all of the details. But he likens investing to, and putting a portfolio together, to building a baseball team, right? You're going to need some guys that can hit for average. You're going to need some guys that can steal some bases. You're going to need some guys that can hit home runs, like an NVIDIA, right? So you need your Microsofts, you need your NVIDIAs, And you got to live a little bit too. You might want to get an aggressive stock in there in spots, right? So VectorVest can do all of that. And we're going to give you some great ideas on how that can be done. And really what it comes down to for us is we balance these two indicators. So we track 9,000 stocks, right? And then what we do is we assess how safe or risky are they and what kind of upside potential do they have. So the upside potential, in our view, comes by earnings and earnings growth, right? So in order to have high RV, you need to have strong earnings and earnings growth in order to get that. In order to have high safety, you need a proven track record of continuing to be able to do, having done that for a long time in the past, and then having a high likelihood to continue to do that in the future, right? So the one thing that you see across the top there, the one common denominator is high relative value. We believe everybody needs earnings and earnings growth to get the job done right. Then whether you want safety or not is certainly a matter of temperament in terms of prudent or aggressive, because aggressive folks, if you look for safety, that can slow the stocks down, right? So your good safe stocks, for example, like a Microsoft, it typically doesn't move 12% in a day unless it's an earnings announcement or something sometimes, right? It might move 2 or 3, but do so consistently. Well, aggressive stocks, these are stocks that can shoot up the page. So you actually desensitize. You want to desensitize the safety a little bit to give you the leap in the stock price, right? Whereas prudent, you want the best of both worlds. So if that didn't make sense to you, what I just said, then you're probably prudent. You want the best. You want your cake and eat it too. You want good safety and you want a good upside potential. So that's where you want to live. And it doesn't mean that your RV should be 1.01 and your RS is 1.02. Go for it. It's the higher the better. This is where the emphasis is, right? So the higher the combination of RV and RS, the more prudent the stock is. See what I mean? Whereas aggressive, your main emphasis is on getting as high an RV as possible, typically. Conservative, you want high safety. The higher the better. Speculators, lots of luck. That's water cooler stocks. They typically don't have fundamentals or earnings growth at all. And there's money to be made with them. And we've got some speculative searches, I tell you what, that can kick the pants off the market pretty consistently, like a Timson's Tigers, for example. But it's not something that you want to throw into your retirement portfolio. It might be something that you want to take a small denomination of capital and have a little bit of fun with. So anyway, it's a lot of fun. This is what the stocks traditionally, how they, kind of perform if we had to lay it out graphically. If we start in the top left, you're going to get your smoother, steadier, consistent upward performance. If we go bottom left with conservative, you're going to get a little bit of growth. You're typically going to outperform market averages when things are really going well. But there's not going to be a lot of consternation. There's not going to be a lot of volatility, and it's pretty easy to live with. Preserve the capital that you have, grow it at a fast enough pace where you're better off than fixed income, and that kind of thing. Top right, you're going to start seeing a lot more upward tilt. But that upward tilt comes with a lot of volatility. So if you're not comfortable with that, that's when you head back over to the top left with the prudent category. So this hopefully lays it out for the more visual folks in helping you determine where you want to breathe and then, or live and breathe in the product. And if we come into Unisearch, then we can start exploring the categories that are best suited to produce those kinds of graphics, right? So we go to, search is aggressive. There's some great searches in here, just like plain old best stocks under 20. Is a great place to start. High VST stocks, less than $20 in price, typically don't have a lot of safety. So if you run the search, you're going to see, slide out here to the right, some stocks that have, more so than not, a lot of high relative value. Some of these are ETFs, or a little bit more, almost to a speculative stock there with DRCT, but how quickly did we identify that? Maybe we ought to think about skipping over that one, And so more so focusing on these kinds of stocks right here with just the high RV, and the higher the better, right? But they have some volatility, and we showed you that that chart earlier. Let me show you what the stocks can look like sometimes. It's moving up the page pretty good. I mean, real good, to the tune of about, I don't know, 20 some percent here over the last 3 months, right? But it's got some volatility along the way, right? So if that's not for you, maybe we ought to head over to the prudent category and go with, I don't know, let's try prudent performers. That's usually a pretty good one. Mine's in here as well. You can really pick any one you like. But here you can see we're even saying the relative safety needs to be not just above 1, but greater than 1.15. We've been in this little booger in the Jockey Club, this GNE. We're up about 31%, I think, something like that in that trade right now. And this is the smoother, steadier upward, direction that you're looking for, right? Super microcomputer, just smooth and steady, not going as high as some of these other segments of the market right now with kind of the macro environment. Tech is kind of in and out of favor pretty quickly these days. But that's in a nutshell, that's what we're trying to do, is get you more towards the stocks that did not have nearly as much volatility on a day-to-day basis as some of those stocks that were in the aggressive category. Okay. All right, so let me get out of here, back into VectorVest. Hey, what's up, Earl? I didn't see your comment earlier. Sorry about that. All right, let's see here. This is a new development. New development. Maybe some of you saw Mr. Glenn Tompkins' wonderful presentation on beating fixed income with the Magnificent Seven. But we are building out some ETF. Trying to build out some ETF options into the platform to give you another easy alternative to fixed income. Although fixed income is becoming less of a attractive instrument as we speak here, it seems. But again, a simple way to certainly outperform the stock market and kick the pants off of fixed income. And generally, it moves up the page very methodically. We can even look at sort of the middle of it where the COVID was early 2020. That would have been your drop here. Okay, made it through there without too much damage, right? And ever since, even though the market has largely been going down, certainly since February of 2021, this has been going higher. And that comes back to that little timing model I talked about earlier in this presentation called the Green Light Buyer RT Kicker. That's the timing model that this one uses. So even in a down market, even in some of the worst markets, aside from the Magnificent Seven, which is muted, actually some of the market average performance, I think, here over the last couple of years in a pretty big way, a lot of stocks have had a pretty tough time, haven't they? But this portfolio has gone on to new higher heights almost month after month, which is ideal. If you can move up 8 or 9 months out of every year, you're doing pretty good, right? So lots of fun stuff to talk about there. We're also going to give, of course, insights on managing portfolios. This is pretty light stuff for this webcast, but we've always got new folks coming in. We want you to realize that we're very grounded in our approach, and so we hit just some of the highlights. And the main thing, anytime I meet a new investor, and I've always got friends that are saying, hey, Steve, I know you've been at this for a while and you're doing well. What do you do? One of the very first things that I teach folks is this. And that is, what you don't do is put all your money in NVIDIA, right? Or even just the Magnificent Seven, because if that's what you were in over the last several days, then, you didn't do as well typically as people that were focused, like we were triple leveraged small cap and triple levered semiconductors just in general. And, there was a lot of give back today, unfortunately, but we still walked away with like 5 and 6% in just a couple of days, just buying small cap indexes and using some leverage. Biotech also has been kind of going nuts, going crazy until today. But the main thing is to spread it around. And so, you can do that by using a few different indexes, or you can do that buy 10 to 20 stocks and dollar weighting them. So when we say dollar weighted, if you have, let's say, $100,000 portfolio, doesn't matter the portfolio size, okay? It's just math. But if you got a $100,000 portfolio, you're going to go to 10 stocks. That means $10,000 per position. If 3 months later you've got $120,000, that means you buy the new stock in at $12,000. Which is keeping the portfolio balanced in monetary outlay into each and every position as close as possible without breaking out a 600-page book written by Van Tharp on position sizing. If you ever read that thing, I recommend a completely full thermos of coffee every day and some toothpicks to keep your eyelids open, learn about Sharpe ratios and everything. Look, managing a portfolio can be this simple. Just keep your risk spread evenly. That way, if hopefully at least more than half of your stocks are going up, so that if you own an NVIDIA that's not doing as well on a day like, yesterday, right? It's not submarining your whole portfolio. The other stocks are, carrying it on its back. That's the idea here. That's the premise. And it's the right one, okay? Number 2, 10 to 20 stocks. If you're new, probably should lean more towards 20, honestly. Because again, you're a little bit newer at picking the right ones. And I still to this day, now my portfolio is pretty big. So I kind of need to go to 20 stocks at this point anyway. But I've always kind of had around 20 stocks when I'm fully locked and loaded. I'm not always fully locked and loaded, but it just spreads your risk out. And if you're dealing with your retirement, 10's the minimum, and 20 can be even more attractive. And consider diversification for some of the reasons we just mentioned. Magnificent Seven hasn't performed the best over the last couple of days. So you need to have money elsewhere, not just there. All right, simple and effective continuing ideas here is follow a market timing signal that's going to keep you on the right side of the major turns. Remember, the idea of a market timing signal is not to absolutely nail the very bottom and the very top, although we get close enough, right? Anybody who thinks that they can do that, just it's just not possible to be able to do that. But what you try to do is you try to nail the turns within a week or two, of those lows, and then ride the market up or down accordingly. And that GLB RT kicker does a really good job at doing just that. Number 2, never risk more than 1 to 2% in any position. So to go back to the $100,000 portfolio, 10 stocks, that means your stop loss, if you use percentages, should be either 10 or 20% per position, okay? That way you won't lose more than $1,000 or $2,000 of that $10,000 you start with. Make sense? Hopefully it does. And I've actually found that around 15 is kind of the number, particularly with prudent type stocks. So, that's 1.5, and fits right in that field goal there. And that's having done literally millions of tests and real life experience for 23 years now. Okay, somewhere around 15 to 20, somewhere in that field goal. I generally gravitate towards 15 just for peace of mind's sake, but right in that 15 to 20% is kind of where even some of the better prudent stocks kind of find their floor. Okay. All right, so let's talk a little bit more about the event. It's going to be 2 days. It's live and in person or streaming, depending on your preference. And there is more decisions to make here, just a bit about that. But 2-day event, January 5th and 6th. We like to kick off the year in Tampa with it. It is right at the Airport Marriott. The Airport Marriott is literally inside the airport. So you go down, you pick up your bags, you get on the elevator, you go up 1 floor, maybe it's 2, and then you go down a corridor and you're there. I mean, it's literally that easy. There's no need for rental cars. If you need ideas about what to do, I'm a Tampa native. I'm going to go ahead and call myself. I moved there when I was young, left when I was about 20. And I know all the ins and outs of that city. If you need recommendations on things to do in the evening, stuff like that. I will be there. Now, let's talk more importantly about what's going to be at the event. So in terms of the event, day one in the morning is really all about the basics. And that's intentional, of course. So we're going to have all different kinds of skill level at this event. So we're going to start with bare bones, grassroots VectorVest. How to analyze stocks is literally the first presentation. So I talked briefly about RV and RS. We're going to talk a lot more about it and others in that segment there. At 10:30, I'm going to do the presentation on the art of buying low and selling high. And that's a wonderful presentation about kind of the art form of how to do it. So it's a 30,000 foot view. And then what we do from there is we dig into those details. And that'll start with the triple fixed income performance. Now that doesn't mean using fixed income. Of course, hopefully many of you know fixed income is fixed. But it's a simple and effective way to triple the current. At the time that we put this together, that 10-year was running at about I think it was pretty close to 5. I think it's paired back to about 4.6 now, something like that. But anyway, so it's maybe almost quadrupling now. So in the afternoon, we get even a little bit deeper down the rabbit hole, if you will. And we really start to do some heavy lifting. So right after lunch, boy, we do a served lunch for people that come to the on-site venue, of course. And the food is exceptional. Your cost to attend is not even going to pay for the food that we serve you there, okay? And I mean that. It probably doesn't even pay for the first day. So in this case today, we got a very special price. So stick around for that. Finding the right stocks. So that digs into the 4 investment types that we covered very quickly here and gives you some of the best options in each of those categories. That's the idea. So you'll see some performance, you'll get a better feel for it, and you'll walk away with a list that's right for you, okay? 2:30, how to build and manage a retirement portfolio. This is a hallmark of this event at this point. Really love it. It really lays VectorVest out from a complete picture view. And what I mean by that is Jim's devised a system using our high safety stocks to generate income by way of dividends, but also with Ron Wheeler coming on board by way of options income, because the days of the yield premium don't exist anymore, right? I wish I was part of those days way back then. Well, I'm not sure I do actually, but 11 and 12% dividend income sounds pretty good. I know that came with a little bit of a price, but anyway, 2 and 3% is not going to get you to grandma's house. It's not going to keep up with inflation, right? So we're going to show you ways that you can do better than that, a lot better than that, and also use options to make these great stocks very worry-free, as I mentioned earlier. So it's a complete approach. It's when to buy, what to buy, when to sell, when to even increase your income by using options, how to do it, and most importantly, how to protect that nest egg. At 3:15, I do situational investing. Situational investing is about implementing tactics that are consistent with the current market behavior. Looks like I missed a few questions. I will come back to those, guys. Be patient. I definitely will. If I start to forget, remind me. Situational investing, kind of runs through the sequence of events that unfold in the stock market and then the best opportunities in VectorVest at those times, right? So in VectorVest, it's kind of like a sine wave. And for those of you that don't know what that means, just bear with me here. Markets go through a bottoming phase, then they go through a high momentum phase as they're making their way up. Then they go into kind of a toppy phase, and then they turn over and they shoot down, right? And then they do it all over again. They go through a bottoming phase, it goes through a high momentum phase, it goes to a toppy phase, and then it shoots down, right? Notice the term shoots down, right? The stocks fall faster than they rise. So that's where people get in trouble usually, right? But then, so it's how to identify all of those situations, and then what are the best things that are congruent in maximizing the potential of those situations? What are some of the best bottom fishing opportunities at that time? So how to identify the bottom is likely here, what to look for, what strategies to consider, Then when I make the shift to high momentum, when do I think about making that shift? What are some of my best opportunities there? Then as the market gets toppy, how do I move from high momentum into a little bit more safety, right? And then when do I know to pull the plug? And then when do I know to do it all over again? Even make money on the down if you like. We'll give you some ideas there as well, okay? So there's a lot in that presentation, as you might have just guessed. But it's a lot of fun. That's really is, again, everything's a highlight, right? I love all of it. I put it together, so I'm a little, I guess, fond of it naturally. But people have always said, every year they come. Some folks come literally every year. They keep saying it's getting better and better every year. So, and it's great, So it's worth doing, guys. Look, that's one of the benefits too. So I'm going to hit on some things as they come to mind as we go through this. One of your big advantages in going to this workshop and attending live is you'll have the ability not only to rub elbows with us, which is an advantage. I literally don't stop talking to people from when I wake up in the morning to when I go back into the room that evening, it seems. I'm okay. It's good. It's groovy. But also the ability to rub elbows with people that are successful with VectorVest that are subscribers. Some of our most hardened, been with VectorVest for years, making lots of money folks were always, and they wouldn't miss it for the world. And you say, well, why do they need to keep coming? Well, you know what they told me? I asked them myself, gee whiz, I know why I keep coming, but why do you keep coming? Why do you keep teaching, Steve? Well, because I like to help people. That's why. The reason they keep coming to the events is, they tell me that they learn something every time. That one little nugget, is worth continuing to come back. And there's always something new, Steve. Or I tell you what, I know that there's things that that I learned this time that you've already said a few times before. I just never picked up on it. So there will literally be people there of every skill level, from people that have just started VectorVest, maybe people that haven't even taken out a trial yet, all the way to people who have been with VectorVest for 25 years, And that's a lot of fun for you guys to be able to hear them talk, hear a little bit about what they do. They may not tell you everything. They might have a secret or two. I don't know, but they're pretty giving, like we are. Anyway, back on. So heavy dose of swing trading, morning of day 2, really the whole time through. Jerry kind of goes through the mindset, then some great ways to think about following technical indications on when to buy a stock, all the way from short term, which is surfing the reversal waves, up to much more, when we say swing trade, and it's almost a position at times with a near perfect indicator. I mean, it can go for months and months and months when things are really good. To me, a position is 9 months or more typically, but it could get on the verge of that, sometimes. So it's a great little mix of presentations. Ron's then going to show you how you can leverage those things up, okay, by using stock options. In the afternoon, day 2, live trading with Ron on option income. So we're not talking about leverage here anymore. Now we're talking about collecting income from the trades. And then we kind of wrap things up and we're done for the 2 days. So at this point, we've got a choice now, don't we? I'm going to do a little bit more talking. I'm going to go back and read through the questions. Don't worry, I haven't forgotten, at least yet. You could do it alone or you could do it faster. Old Abe Lincoln said, if I had 6 hours to chop down a tree, I'd spend the first 4 hours sharpening the axe. And I continue to use this. I've always used it. I think others are starting to use it now. I've used this my whole life. As a reminder of, Steve, you're naturally athletically gifted, but you still need to practice. And that took me a long way in my soccer career. Long way. A lot further than most people would ever go. Public speaking. I was the little kid shaking in the back of the room that nearly passed out the first time he got in front of the class. But you keep working at it, and eventually you get good. And so if you want to make the most out of 2000, how does this all apply to this current situation, right? If you want to make the most out of 2024, Don't just take my word for it. If any of those people I was talking about earlier, the 25 plus year people with VectorVest, were here on this microphone right now, they would flat out tell you the same thing I'm about to say. If you want to make the most out of 2024, you need to get to this event. Okay. And you can do that one of two ways. You can pay $95. I am now a liar. I hate that. I said the price would never go below $195. I've said that how many years in a row? So I hate it. Oh, $95. I'm not going to say it anymore. Listen, the food alone for the 2 days, a plated meal at a hotel, what do you think that runs, right? And you're going to have a cocktail reception. You're going to have, you're going to have breakfast every morning. I've run the budget here for events, and that's probably half of it per person. So this is crazy. $95 you can go. We're going to spend more. We're going to spend $95 still for you to be there. Okay. Video stream is free. You do not get the fine food. You do not get the camaraderie. You do not get to rub elbows with our 25-year vets who are super awesome and will tell you that, this is what we're doing kind of thing. So I would encourage you to go in person. Now, this event typically sells out in person. It didn't last year, but I think we're just kind of still coming back off of that COVID situation. I think we're up in the ante here to try to make sure we sell it out again this year. There's over a couple hundred seats, about 225 or so. Okay. I will be shocked if this doesn't sell out. So if you're going to go, you need to do it today or as soon as possible. Talk it over at these prices. I get it. Some of you have to travel, that kind of thing. Talk it over with your partner as soon as possible and get yourself signed up because it will sell out. It will sell out. Free. I think that takes away some of our attendance because it's free. You can stream it on your portable device wherever you are. So there's two websites at the bottom. You go to VectorVest.com/Tampa for the in-person. You go to VectorVest.com/stream for the free video stream. And don't worry about all the details. Just worry about getting to the right place for now. We're going to have all the email correspondence to make sure you don't miss the video stream and all that. So this event is going to be taped. For people that attend live, you will still get a recording of this 2-day event. So we'll I need to make sure of my details of the people for the stream. Okay. But I know if you're attending live, you'll have access for about a year on the recordings. Streaming, I think you're kind of stuck with the event, but you can circle back with us on that if you'd like. All right, so that's that. Let me go back through some of the questions, and then I'll do kind of a final formal close and my last push to make sure you get there, because that's my job right now. I mean it. If you don't get there, you're making a big mistake. I mean, it's free to do it from your own home, and that is ludicrous if you don't do that. Absolutely ludicrous. It's more important for us to educate you up, keep you as a subscriber, so much so that it's free to do it, okay? Take advantage of that. That is stupid not to. Flat out. I'm going to use the word. I'm going to use the nasty word. It's stupid not to. All right, let me go to the top. Will the ETF portfolio option be included in the Unisearch? Better than that, it should be a trading system, I believe is the plan. So it'll be in Trading System Viewer, okay? Is there any difference between signing up and following remote? No difference in content. The only main difference, I covered some of the differences in terms of like on-site experience, right? So you lose some of that stuff. That's it. You don't lose any content. All right, awesome, Oscar. Well, hey, Oscar's going to be there. See you there. How often do you rebalance? No rebalancing in that one that we showed, okay? It looks like seminar is combination of TSIC. Yes, it is. Very astutely noticed there, Michael. So it's almost broken up by coaching variety as you go through the 3 days. That's another way that I could think about laying that out next time around. Yeah, it's really broken up into the coaching classes, yeah. All right, let's see. Steve, have you been with VectorVest for a long time? What's your personal average return annually? That's a tough number. You want the best year ever? That was 274% with just stocks. And that's with a portfolio of 10 or more the whole year. How about that? And it was not on a small amount of money. I remember having $60,000 and $70,000 days, okay? All right, let's see here. Will there be real learning opportunities or will it be very little application? Of course there's going to be, yes, there are going to be very real live learning opportunities. That's the whole thing is we don't do any fluff at this thing. This is all meat. It's like drinking from a fire hose is what you got to be careful of. What you got to figure out, and we try to help you early on, is what are the presentations that are going to mean the most to you as an individual, right? So if you're more of a swing trader, you want to put a heavy emphasis on not getting drowned out by all the other stuff and focusing on the swing trading. If you're more retirement, this is my focus. Focus on those segments, you know what I mean? But no, there's no fluff. It's all fire hose. All right. You're welcome, Oscar. All right. See you there, John. Sweet. You going live, John? I hope. And Oscar, I think you said you're going live. That's cool. If streaming, is there access to recorded? Yes, we covered that. We're not sure about the recordings. I'm not sure. I need to check with Ray on that, actually, on the streaming. I know that in live, we'll have that ability, okay? What was your worst year trading? Actually, this year is going to rank up there. We'll see how it finishes out. But I'm just marginally, and I mean, like, to the decimals, I think, positive this year. I've had a couple of positions weigh me down this year, actually. That's the way it goes sometimes, right? So this year, actually. What are the dates again? So yeah, let's go back to the beginning. We did a little gambling money this year. That's okay. I can afford to do it. January 5th and 6th, 2024. January 5th and 6th, 2024. I'm a current VectorVest subscriber and earlier in July this year purchased all access pass. Is my in-person attendance at this event included? No. So it's still the additional $95, I think. You might want to call VectorVest support because the educators, at this point, we have so much tied up into making sure we do the education that we're not as involved with the sales anymore. So you could double back and verify that, but I believe everybody, largely we've got to pay for all the food and everything. Like I said, this event is going to cost us money, at least on the surface. Okay. All right. Let's see what else. We'll do still a great deal. Yeah, for sure. Yeah, for sure. Listen, you're not going to be disappointed. Don't even worry. But the $95 is just, you know what that really is? One interesting thing that you might, I'm not afraid to say on mic, if we do a free event, more than half the people that register won't even show up. If you charge them $10, well, more than half of the people will show up. Isn't that something? So think of it that way. We just want to make sure you get there. That's really all it is. That's really all it's ever been. Okay. We tried to cover costs initially. All right. Anyway, let's get out of here. So again, guys, thanks for all the questions, and you got very candid, cordial answers. So hopefully that's going to resonate with you, and we hope to see you there. And we hope it's going to be a sellout. Last year was the first year I can remember where we weren't at least pushing the envelope. And now it's coming off COVID. So maybe things are a little stronger again this time. We'll see you there. We'll see you in Tampa. Get there. I want to see you. Get to Tampa. Gives you a chance to talk to me too. All right. We'll see you guys. Good luck.